All right. Hello, everyone. Thank you so much for joining us. It is 1:31, and I know we have quite a few folks registered. There's about 40 people in the room. So we're going to give folks another minute or two to join and get settled in, get their audio adjusted, and we will begin shortly. Thank you for joining us. All right, it is about 1:33 p.m., so we're going to go ahead and get started. I see people still filing into the room, but that's okay. We can go ahead and get started anyway. Let's go ahead and advance our presentation. So welcome to the Community Resilience webinar, Navigating Recovery After the Storms. Thank you so much for joining us. I know it's a busy season, pre-holiday, everybody is still in post-storm mode. So we thank you for your time and patience as we go through our presentation today. A little bit of housekeeping. Our presentation is going to be running about 90 minutes today. That 90 minutes is going to include a lot of information. The presentation will be recorded, so don't worry about taking a ton of notes or having to recall everything. A copy of the presentation will be available on the town's website and will also be circulated with everyone who registered. For today, our question and answer, if you look on your screen, you're going to see a Q&A tab. So just click the Q&A, type your question, and hit submit. What that allows us to do is to answer as many questions as efficiently as we possibly, as much as we possibly can in the time that we're allotted. What it also allows us to do is if we can't get to everyone's questions today, at least we have a record of it. We're able to talk to our subject matter experts, write your questions out, and make sure that we're circulating the answers to everyone who is participating today. So what are we going to be covering? A lot. So we're going to be covering the FEMA 50% rule and emergency permitting. I know there are a lot of questions circulating about that. We're going to be talking about available state resources for ongoing recovery, navigating financial assistance, protecting against future flooding, and learning a little bit more about post-storm insurance and how that all works. So before we get started, I wanted to share some numbers that I thought was really important to give us some context to today's presentation. So Helene and Milton, let's look at some numbers. So $190 million, that's the estimated preliminary damage assessment done so far. So that's our tally so far. That's a lot. 6,503, that's the estimated staff hours for post-storm cleanup and recovery. 2,331 affected structures on the town. And if you're, if you like percentages, that's roughly between 25 to 26% of all the structures on the town of Longboat Key. And 849, that's the number of permits that have been issued between November 1st and today. That's a lot. And so the storm we know has affected everyone. It has been such an emotional roller coaster. It's been incredibly overwhelming. And so now that the dust is settling just a little bit, we wanted to take pause and share some valuable information from our subject matter experts, not just at the town, but connected to both private sector and state resources to share kind of where we are, what we've learned, and to help answer some of the questions that our community might have. So with us today, we have an amazing roster of subject matter experts from the U.S. Small Business Administration, MIC Insurance, town staff from Planning, Zoning, and Building, floodproofing.com, and the Division of Emergency Management. So with that, the very first presentation up is by our own Town of Longboat Key Planning, Zoning, and Building Department with Patty and Neil. Patty, I have the presentation loaded up and ready when you are. And if you guys don't mind unmuting yourselves, please, because I don't think we can hear you.
Oh, hi, this is Neil Macy, and I'll be talking about the FEMA 50% rule. The FEMA 50% rule is part of the National Flood Insurance Program and states that the cost of repairing damage to the structure, if a cost of repairing damage to a structure exceeds 50% of its market value, the entire structure must be brought up to current floodplain management standards. Meaning that if it needs to be rebuilt to comply with the latest floodplain regulations and elevated, most likely because most of the damage has been done to a slab on grade structure that's non-conforming and was built prior to the town participating in the National Flood Insurance Program in 1971. The purpose of the rule aims to mitigate flood risks and continuing losses encountered by property owners and insurers in the floodplain areas.
You can advance this slide, Darren.
Non-FEMA compliant homes are the ones that are mostly targeted. The rule aims to build long-term resilience, improve community safety over time, lower flood insurance costs, and ultimately preserve property values. Substantial damage is the cost to repair a building or a structure. Advance the slide, please. Substantial damage is the cost if the cost to repair a building or structure exceeds 50% or more. It is considered of its pre-damaged market value. The building is considered substantially damaged. If it is substantially damaged, the owner will be required to bring the property into compliance with the floodplain management regulations, the Florida Building Code, and comply with the National Flood Insurance Program requirements. Next slide. Substantial improvement means any combination of reconstruction, addition, repair, rehabilitation, alteration, or other improvements of a building or structure where the cumulative cost of which equals or exceeds 50% of the 3% of the market value of the building before the improvement or repair is started. If substantial demolition is proposed, the structure shall be considered substantially improved. The structure has incurred substantial damage. Any repairs are considered substantial improvement if the amount of that repair exceeds 50%. The term does not include, and the costs involved do not include any code required elements that are required to correct existing health, safety, or sanitary code violations previously identified by the building official and that are the minimum necessary required to assure safe living conditions and habitability. Next slide. If a building is substantially damaged or substantially improved, it must be brought into the compliance with the flood damage prevention regulations in the NFIP as well as the local floodplain ordinance, including elevating the buildings to the design flood elevations, which is typically the base flood elevation plus 1 foot. Given the impacts of sea level rise, the town of Longboat Key has revised their building height regulations now allow property owners and their design professionals to elect optionally 3 feet of freeboard townwide and up to 5 feet of freeboard in areas that are at or below 3.5 feet of elevation on the island. Likewise, all the electrical, mechanical, and plumbing equipment, bathrooms, laundry rooms, etc., must be elevated as well to that elevation of a design flood that the owner or the builder elects to build to. Non-residential buildings, such as commercial buildings, may be dry flood proofed instead of being elevated, and building permits are all required for elevating the structures. Next slide. After the storm, or storms in this case, We canvassed the areas originally with, window inspections, which are just the initial, assessment of what we call windshield inspections, initial assessment of what we suspect to be substantially damaged or substantially affected structures. And we posted 3 different placards when we found structures that may have had some damage that we see from the outside of the structure, particularly such as water lines that we can see from the water raising up the side of the building, damage to air conditioning units, electrical panels, things of that sort. A yellow placard would mean that we found stuff to believe that it's been affected, and you may or may not have to get some additional work done. You'll definitely need a permit for the most part, and you can come in and get that from the building department. The red unsafe placard means you should not occupy. It's been found that there's either structural deficiencies, either in a parts of or the majority of the building itself, to render it unsafe to occupy. And you can enter at your own risk if you had to get some belongings out or whatever. But we would mark on the placard what specific areas of the structure would be particularly unsafe to enter. If the next slide would be, if it's a red tag that says danger, the entry to the building is prohibited and unlawful. It's deemed basically unsafe for human occupancy by the building official, and you are not to take that placard off. You're to contact the building, planning, and zoning department, obtain a demolition permit, and then get the demolition permit, get the water and the sewer capped, the power disconnected to the structure, the building demolished, and then you can rebuild with the proper permits at that time. And with that, I will turn this over to Patty, the building official, for the emergency permitting.
Good afternoon. My name is Patty Fig. I'm the building official for the town. And I'd like to give you some information about emergency permitting to assist you in your work here in the island. Here at the building department, we have streamlined the initial permit process by allowing work to start before a permit is issued, such as removing drywall material. We are only requiring that you submit a permit application for this work within a 24-hour period. Later, when you discover that more work is needed to be done, an updated work description and scope of work is needed. Depending on the extent of the additional work, a floor plan layout page may be needed and additional plans, as well as the Lone O'Keefe FEMA forms. Next slide. To assist you in rebuilding efforts, permit fees are being waived through April of 2025 for storm damaged structures from Helene and Milton. Fee waivers include plan revisions and reinspection fees and permit fees such as repairs, rebuilding, mechanical systems, plumbing, and electrical permits. And that the fees will continue to be waived until through April 2025. Next slide. Permitting submittals can be done either online, electronically, or in person. Online submittals, you need to select the hurricane damage, or if electing to do paper application, select the box indicating storm damage on the actual permit application. We are experiencing a high volume of permit submittals, which has outpaced our existing staff. We have been looking proactively for additional staff since September and have reached out to other agencies, employment agencies, social media, and has been quite challenging getting staffing, especially because the They have to be Florida licensed. We realized how important it is getting your permits out to you and are working as diligently as possible. Staff working additional hours to process more permits, as well as getting additional staff support to further assist in this permit issuance, as well as continue streamlining our processes. We are we are able to process permits, plan changes in the field. When an inspector goes out to a job site, they do an inspection, contractor has a plan change. The field inspectors are dual licensed as plans examiners and can look at that plan change and approve it on the site. We also are utilizing them in the office for plan changes as well to help expedite things. What kind of work can be done without a permit? Temporary roof permits, exterior wall repairs, interior ceiling and walls, drained floodwater accumulations, temporary repairs to steps, and then roofing repairs that are 1 square or less. That's a 10 by 10 area. They do not need a permit. And we just wanted to also make sure that you verify that the contractor is a licensed contractor and be alert to signs of fraudulent activity where someone may have submitted a FEMA assistance application using your personal information, and the FEMA inspector shows up at your home even though you did not submit a FEMA application. Please report to your local law enforcement agency and call the FEMA helpline number posted on your screen. Another note worth mentioning is there are many FEMA representatives, housing crews, housing inspectors out working throughout the Longboat Key neighborhoods. They will always have an ID and they do not charge for their services. And if you need additional information, know that we are here for you and doing our best to get you what you need. And our staffing increases. As our staffing increases, our permitting processing will as well. Thank you for your patience as we all work together and be Longboat Key strong and resilient. Thank you.
Thank you so much, Patty and Neil. Appreciate you. The next presentation we have is from Angie Odell. Angie is the Mitigation Planning Manager for the Mitigation Bureau of the Florida Division of Emergency Management. It's a mouthful. Angie, passing it over to you.
Thank you for the introduction. As she said, I'm Angie Odell. I work here up at the State of Florida Division of Emergency Management. I'm here to talk to you a little bit about some mitigation grants that we've started opening up for residents. We have our statewide residential mitigation program called Elevate Florida. So what this program kind of is about is being able to help residents go through and actually mitigate and reduce that long-term risk that they may be facing with their homes. And to also enhance your community resilience to help you better recover faster. So the 3 different project types that we are accepting through this as far as residential projects are structural elevations, which means the actual physical raising of the house. Second story conversions are not allowed only because there are some safety issues as well as just a lot of structural issues that we don't want to undertake and have those issues later on. So only elevations are eligible for that aspect. And then we also have mitigation reconstruction, which is where we demolish your house and rebuild it up to the same square footage plus 10%, as that is the most allowable amount, where you would be up into compliance with both floodplain regulation as well as Florida Building Code. The mitigation reconstruction is really only used when your house does not pass the structural assessment in order to be safely elevated. So mitigation reconstruction is kind of the secondary if you can't be elevated. Now, mitigation reconstruction is not eligible in coastal V zones, in your flood zone Vs, and VE zones, just because of the high amount of risk that is already there. And so FEMA just does not allow that construction going on. So mitigation reconstruction is not eligible in V zones. So if that means that your house is not able to be structurally assessed in order to raise it to an elevation, your other option is an acquisition and demolition. Now, what this is where your local community comes in and purchases your structure. This is a voluntary program, and we offer around a pre-market value for your house and pre-disaster market value of your house. And then you would be free and clear, and then the property is then demolished and returned back into open space. Allowing this to go back into open space also allows a lot of your natural floodplain functions come back and can actually help reduce the community, especially if you have a neighborhood that maybe floods quite a bit. If you have quite a few people who actually go through the acquisition process, then the ground saturation can increase more ground soluble. So with that all said, the timeline for this is 12 to 18 months. That is from the time of application to roughly about the time of construction and closeout. The applications do have to go through a very thorough review. It's not just, hey, here's my paperwork and review it. We have to do engineering as well as programmatic to make sure that it is eligible underneath FEMA's grant programs. And also to make sure that the engineering aspect, there's the structural assessments, but also a budget cost analysis that we do to make sure that the benefits are actually outweighing that cost. And then we also have environmental reviews. A lot of environmental reviews, especially if you have a historical structure, which is the 45 years or older, it does require a little bit more of a review, only because you are have the historical aspect to your house. But we still have to go through that environmental review for all homes to make sure that we know what those building materials and everything of that sort is. But again, we're looking at 12 to 18 months from the time of application until the time that construction and closeout has happened on your house. Some of the next steps that you can see in this flyer that you guys as homeowners can start preparing for and doing is you can have photos of any flooding inside or outside of the home that you may have taken, only if it's available. This helps expedite our application process a little quicker by going through these next steps. If you can provide photos of high water marks or photos measuring the height of those marks, so we can show that, yes, you've had flooding, you are having repetitive loss, repetitive flooding to this. So we want to make sure that we are actually reducing that as well. What also a big thing is making sure that you have your insurance claim payouts or any assistant documentation. This means that if you have received any FEMA individual assistance or state individual assistance, or even have received a loan through SBA, we just need to have that documentation. Just because you have those documentation and you have asked for that help does not mean that you are disqualified. We just have to make sure that there's there and we don't have a duplication of benefits. And that is one of FEMA's requirements. You also want to make sure that if your house is in that 45 years or older with a historical, any aesthetic alterations to the home and the year that you have completed those alterations. Any of those alterations can be window and door replacements, roof replacement, any remodeling both inside and outside that you've ever done, painting, residing, any additions, decks, landings, or garages. Also, if there's ever been any historical use of the structure, did it used to be an old church or a schoolhouse? These are just things that we need to be aware of. If you are interested in the program and would like to be on our interest list when it comes time to having the application period open, you can go to floridadisaster.org/residential mitigation. And that is our most up-to-date page for residents to be able to find as to where we're at in the process of opening up that application period. We do have the goal of having that application period open for homeowners and residents to start applying in mid-January. We are going through some of our procurement processes now, so I can't speak a lot on as to some of the things that we are going through. It's just that we are looking to have the application period for residents to start applying into mid-January. Thank you.
Thank you so much, Angie. We appreciate it. And next up from the U.S. Small Business Administration, Ana Nunez. Ana is the Public Affairs Specialist with the Office of Disaster Recovery and Resilience. Ana, I have your presentation queued up, so I'm ready when you are.
Great. Yes. Leave it there and then I'll tell you when to switch it. Thank you so much. First, my name is Ana Nunez. I'm a public affairs specialist for the U.S. Small Business Administration's Office of Disaster Recovery and Resilience. I'm also here as a disaster survivor from Houston, Texas, who has endured numerous hurricanes, tropical storms, flooding. So please know that personally, my heart is with you, and I really understand everything that everyone is going through. I first want to thank you, Elma Felix, Planning Manager for the Town of Longboat Keys Planning and Building Department, the entire department, for allowing me to share information about the Presidential Florida Declaration for Hurricane Milton and Hurricane Helene. We really appreciate being here to share this important event. Slide 2, please. So this is the, as Elma said before, don't worry, I'm going to give you a lot of information. You're going to receive a copy of the slide, so don't worry. But so here's the contact information. In times of disaster, the SBA helps businesses, nonprofit organizations, homeowners, and renters with their uninsured or underinsured disaster-related losses. You do not have to own a business to apply for an SBA disaster loan. Manatee County was declared a primary county in the Florida Presidential Disaster Declaration and is eligible for both physical and economic injury disaster loans from the SBA. Next slide, please. So Manatee County residents can apply for 3 types of SBA disaster loans. Business physical damage loans for up to $2 million to cover physical damage and financial losses. Home disaster loans for up to $500,000 to cover damage to primary residences and up to $100,000 for homeowners and renters to replace disaster damaged personal property such as clothing, furniture, appliances, and vehicles. Slide 4, please. Thank you. So economic injury disaster loans, you are eligible for up to $2 million to help small businesses and nonprofits to meet their ordinary and necessary financial obligations. Some of the benefits of an SBA disaster loan is there's no fee to apply for an SBA low fixed interest rate loans with terms up to 30 years, no payment and no interest for up to 12 months, no need to wait for insurance to settle before applying, and funds are also available to build back better and protect against future disasters, and these are called mitigation loans. Folks who are offered an SBA disaster loan are also under no obligation to take the loan, but you can't, don't take the risk and by not applying, apply. And you have up to 60 days to decide whether you want to accept it or not. Can you please do the next slide, please? So here are the requirements for loan approvals. Here's the eligibility, your credit history, your repayment, and then the collateral requirements. I'm not going to go into each of these details to be respectful of time, but you are going to get a copy of this. Slide 6, please. And here is a list of the documentation that you need when you visit the SBA Center to apply for a disaster loan. Proof of residence, your social security number, etc. Next slide, please. And here, I'm going to stop here because I also want to mention that I will also be at the Manatee County event this evening. We're going to mention that at the end, but you can go online and submit an application. But next slide, please. I do want to mention that actually, can you go back to slide 8? 8. No, I'm sorry. The beginning where it had I think it's number 2 or 3. My apologies. Yes, thank you. So I do want to emphasize that if someone has already applied either for FEMA or the SBA and they have been denied, please come to our Business Resource Center. That's the BRCs, the DRCs, I'm sorry. We have one in Manatee County, which is at Rocky Bluff Branch Library. I am putting in
Anna, I believe your mic is muted, so we're not able to hear you.
Oh, I apologize.
There we go.
Sorry.
We can hear
Okay,
you.
I sent in the chat. I don't know what I didn't say, but my advice is to please, if you have been denied by either FEMA or the SBA, bring that letter. It may be something administrative that was small, a glitch. We will help you work through that. My recommendation is to come to our Business Resource Center or a disaster recovery center. There are always SBA customer service representatives working in conjunction with FEMA at every FEMA disaster site. Again, I would recommend folks joining us later this evening. Here is the most important part of my presentation, and that is the application deadline for physical damage loans has been extended to January the 7th, 2025. The deadline for applying for an economic injury disaster loans is July the 11th, 2025. Again, you can easily apply by going online to sba.gov/disaster or calling our 1-800 number 659-2955, or please visit one of our FEMA disaster recovery centers or an SBA disaster recovery center. Our customer service representatives, they really do care. They'll sit with you. Yesterday, I was at another town joint FEMA SBA center, and there was an elderly woman who came in. She was very angst ridden, and our customer service representative got on the phone, and she found out that she had been approved, and she almost cried, made all of us almost cry. And so she said, "That's the best news I've heard all day." So I just really want to thank again the town of Longboat Key for providing. We're going to provide a lot of information. I have fact sheets, I have flyers. It's a lot of information, including this presentation. Please know that we are also wanting to partner and bring folks who have any unmet needs, especially if there are businesses or areas of town where you want us to focus more. We can also partner them with SCORE Business Mentoring, small business development centers, and other resources. Please invite us to any other presentation. We are here to serve you. We care, and we really, really thank you for this opportunity. Thank you for this important event. Thank you.
Thank you so much, Anna. I apologize. Sorry for the noise that's behind me. We have a little bit of construction going on at the town. Hopefully it's not terribly loud. But nonetheless, our next presentation is from floodproofing.com. We have Tyler and Brian with us. Tyler is the Executive Vice President and Brian is the Senior Vice President of Strategic Sales. Gentlemen, take it away. You might also want to share your screen if you are able to. Thanks.
Yes, thank you so much. And let's see. All right, so today, we want to go over what floodproofing options are available on the market for buildings. I'll be discussing that. I've been a certified floodplain manager with floodproofing.com for about 16 years now. Then after I go, Tyler will be talking about the flood insurance side of our business as well. All right, so just want to explain a couple different sides of our business at floodproofing.com and what we really do on a daily basis, working with building owners, contractors, architects, engineers, to design and manufacture these floodproofing products for buildings, both residential and commercial. We've been in business for over 25 years. So we not only manufacture and distribute these products, but we also install them and do deployment training. So it is a turnkey service. But really what separates us is our complementary front-end engineering and design. So I encourage anybody on today that has a property to explore, if flood mitigation products are a fit for your particular building. You could do so by reaching out to me or Tyler directly, or by sending some project details over to plans@floodproofing.com. On staff here, we have certified floodplain managers, engineers, licensed insurance agents, and this is a complimentary service where we can do an analysis on your particular building. We also have territory managers stationed around the country. If we get on site, we could do that as well. But we really want to do a full-on risk analysis and determine, what possible flood mitigation solutions are a fit for your building. And, we can provide, budgetary estimates, right? Explain through the options. Down at the bottom here, you're going to see everything that we offer from a floodproofing standpoint, from deployable flood barriers, passive flood barriers that pop up out of the ground, automatic lifting gates or floodproof windows, to flood doors, to perimeter style flood barriers. So there's a lot of different solutions on the market because they all fit a different need. Some deploy more quickly than others. Some are active, some are passive. Some, take up more storage room than others. So every particular building and scenario has its own, custom unique needs. Why all these products, we manufacture and distribute. Do want to just hit on a couple of the products today, but a couple of our affiliated companies, SmartVent, this is where we do hydrostatic relief flood vents. So this is considered wet floodproofing. These are for those elevated buildings that have the non-finished enclosure space. And this is a hydrostatic relief flood vent that would relieve that pressure off the wall, let the flow water flow underneath the space, and then, out the other side. So we've been doing this for a long time. This side of the business is our wet floodproofing side. A couple of the products I want to hit on today on our dry floodproofing side. And again, you see here a mix of everything we offer, but this first one being our expandable flood barrier. This is our most popular residential floodproofing product on the dry side by far, also a fit for certain commercial buildings. What makes this product so unique is it's 28 inches in height, right? So it is for these shallow flooding type scenarios, but it's unique because it's expandable. It expands from 30 to 43 inches, and it doesn't require any permanent anchoring to the building. It's an off-the-shelf style product. It pressure mounts to the door jamb, and then it has an inflatable seal on the sides and bottom. So you could deploy this in under 5 minutes. One person, anyone could deploy it. So very popular for those entry doorways, for that shallow flooding. Doing a note too with this product, you can daisy chain them together to create longer runs for a overhead door scenario or to do some type of perimeter run. That is done through, if you look at that picture in the middle, through these extension poles that do require one anchor pre-installed in the ground. But even with that pre-installed anchor, by hand, you just screw in this post and then set up your barriers to create the flood wall. So very popular product here. And the next product, right, just due to the limited time I want to go over, is our flood logs. So the flood logs that we manufacture, unlike anything else in the market, they are 12 inches high each. May not mean anything to you just yet, but everything else in the market, 6 to 8 inches high. So with these being mega flood logs, it does cut down deployment time by about half because you're deploying half the amount of product. But these flood logs are highly engineered, custom aluminum extruded pieces with gaskets on them. So this is where we'll look at those openings on a building that are susceptible to that floodwater coming in. So we're talking doors, windows, vehicular entrances, And then, we are engineering the solution to fit in that particular opening. This is our most popular product on the, non-residential side, because, fully customizable, easy to deploy, also easy storage. If you look here, just the way they're designed, they sit on shelving or racking, metal to metal, compact storage. How you deploy this, very simple. You have pre-installed inset anchors, and you have your side brackets that you bolt into place, drop these logs in, one on top of the other, and then you have a top-down compression element and then some lateral compression bolts. So you're using this gasket compression technology to have this, flood-proof flood log, right? And we say flood-proof, it's different than waterproofing because it not only not lets the water through, but these flood barriers also have to take the impact. It has to take, a tree that falls down during a flood event and hits the barrier has to be strong enough to still perform. Just a couple other visuals with this product. You could see here, we've done a bunch of different scenarios, whether it's, 90-degree corners, longer runs, higher heights. Again, these are fully customizable. And then a couple other shots here as well. So there are a lot of different options available. Can't discuss them all today, but the main message we want to just point out is that please reach out if you do have a property in a flood zone and you're interested in flood mitigation. We will give you our recommended options based on the site. We'll give you the costs, right? The cost of install, the storage requirements, the deployment times, because all these things have to be in consideration for that particular flood barrier, and how much horsepower you have to actually get it deployed before an event, what type of storage room you have. And then before I pass it over to Tyler to talk on the insurance side, I did just want to give you a real, recent case study. This was an oceanfront residence in Naples. And, we were contacted earlier this year. It was a 10,000 square foot oceanfront residence. They were interested in flood mitigation. We got on site. One of the first things we'll do for existing buildings, right, we'll, assess those existing walls. If you want 5 foot high of protection, we want to make sure that those existing walls could withstand the hydrostatic loads for 5 foot of flow water. So it does make sense to protect the openings to that height. For this particular case, we did 4 flood doors, 8 flood lock systems, and 4 3-sided steel flood panels. So a couple months after these were installed, Hurricane Milton hit, and this, we call it a save, right? They deployed their products before the event, and they happened to get 2 feet of water up against the building. And as you can see here in these pictures, the water level, right, just due to the dirt and debris line. But, talked with the homeowner, and, not a single drop of water got into the building. And it was due to the flood protection measures that the property owner worked with us on to get installed. So, great success story here from, these flood mitigation products, saving the structure. And with that said, I will pass it over to Tyler.
Awesome. Thanks, Brian. So like Brian said, my name is Tyler Ardren. I am the Executive Vice President of our family of companies here. And as he said, we have engineers, certified floodplain managers, and licensed insurance brokers like myself on staff. So I know we have an insurance broker or an insurance person that's going to be speaking to the insurance end of things. Really, I just wanted to touch on some higher level type things, and we'll speed through it here because I know we're short on time. So the National Flood Insurance Program, that's the NFIP program. I just want to kind of give a basis of what that is. The NFIP was formed in 1968, and the reason it was formed was back before that you were able to get flood insurance covered under the normal insurance perils, and at that point, the private companies, no longer wanted to offer that peril, that insurance peril. So that is when the government had to step in the late 60s and form the NFIP program. Now, their goal is to protect structures built in floodplains. It's the primary source of flood insurance for the country. And now private flood insurance has come back in the last, I'd say, 10 years. It's gotten larger and larger. But the NFIP is a guarantee as long as the community is part of the NFIP program, then anybody in that town is able to get NFIP flood insurance. Next slide, Brian. So here's just a map showing all the policies in force. The darker the red, the more policies that are in that state. You can see, obviously, in Florida, how many policies you guys got. You're in the top 3 or 4 most policies in the country. Next slide. So the NFIP offers, from a coverage standpoint, a maximum coverage limit of $250,000 in building, $100,000 in contents coverage. Commercial, you're looking at $500K, $500K. If you're part of a condo association, an RC BAP policy, we call it, you're able to get $250,000 times the number of units from a building coverage standpoint. Now, if you did want more coverage than what the NFIP offers, there are private coverage options to where you can get excess coverage that will go and overlay over top of the 250. For example, you can get an additional $500K, bringing it up to a total of $750. Or there's private companies where you can go straight to them and go and get that full $750,000, like that example I just gave, in coverage. Next slide. So real quick, just want to talk about Risk Rating 2.0. It's a buzzword. I'm sure you've heard about it, though, now since it's been out for a couple of years. But first, I just kind of want to talk about why they're doing these changes, and then we'll talk about kind of what they are and stuff. But on the left, we can see how much premium dollars were paid out in those given years. So, for example, everybody who had flood insurance through the NFIP program paid their policy in 2005, totaling $1.9 billion. In 2012, Superstorm Sandy, 3.3, 2017, Harvey, right around the same. Today, it hovers around around 3.1 bill to 3 billion. But on the right, we could see how many claims dollars were paid out in that given year. So in 2005, for example, upwards of $19 billion were paid out. 2012, close to 9. 2017, around 10. In those middle years there, you could see, a 3, a 5. So needless to say, the NFIP program is over $25 billion in debt to the U.S. Treasury. And if I use my insurance hat, and while I'm looking at this, I can see that, the reason for this is they're not assessing risk properly. Because if they were assessing the risk properly, these numbers would flesh out a lot more evenly. Now, the NFIP's goal is not a private company. Its goal is not to make money. It's through the government. But its goal is to be self-sufficient, meaning being able to do the service work, help alongside to write your own carriers, and pay out claims money. Well, it hasn't been able to do that really since the start of the 2000s. And like I said, a big part of that to me is that they haven't been assessing risk properly. Next slide. So as for when Risk Rating 2.0, it's fully out now. If you're getting a new policy through the National Flood Insurance Program, you will go under Risk Rating 2.0, 2.0's rates. If you're a renewal, then what's happening is they are assigning you a new rate, and they're calling that the FEMA actual risk rate. And you can actually see that number on your declaration page. Under the fees and everything, you'll see on the deck page, it'll say full risk premium. And that number is basically what you're going to increase to. Now, what's happening is there's federal cap limits that's through law to where they can't just jump you at renewal, but what they can do is gradually increase you. So what they're calling that is the glide path, to where you're increasing roughly around 15% a year until you hit your new actual risk rate. And like I said, that actual risk rate will be on your declaration page so that you can see that. Next slide. So previously, just to give you an idea of what the legacy system did from a rating standpoint, just so I can give you a frame of reference, the Risk Rating 1.0, or legacy system, they like to call it, how that they rated properties was either a subsidized rate or a elevation difference rate. So what they did was, from an elevation difference standpoint, look at the base flood elevation level. And what that is that's the calculated level that FEMA estimates what it will rise to. The FEMA maps, they have assigned BFEs to them. And then we look at the BFE and we compare that to the first floor height. So for example, if we have a 8 first floor height and then an 8 BFE, that would be a 0. A 0 paid roughly around $800 to $1,200 a year. As long as it's the same enclosure type, whether you're in Florida or Mississippi or Arkansas, if you were a 0, you paid around that $800 to $1,200 a year. Now moving on to the risk rating 2.0 and how they are currently rating, they're looking into a lot more factors. They're looking at home value, distance to flooding, type of flooding, first floor height, ground elevation, and all these other things on here. So they're using all of this different data points to determine what your new rate is. And it's property by property specific. So it's a lot more specific to what it used to be. And again, using my insurance hat, like somebody say in Florida is probably more at risk of flooding than say someone in the middle of the country. And listen, there are areas in the middle of the country that do have a lot of flooding, but I'm using this kind of just as a basis for us. But because of that, they're looking all in these other factors and they're saying, all right, this is a little more risky. And because of that, they are going to pay higher, even though they're the same elevation difference. So that's how they are rating today. Now, the elevation certificate used to be required for post-firm homes, meaning a home that was built roughly after the mid-70s. That's when the flood maps came out. It's no longer required. Because they're using LIDAR to determine ground elevation and then basically using kind of guesswork to figure out where the first floor height is. But the elevation certificate can still potentially help. If you do have one, it may be a good idea to submit it to your agent. Now, it's not going to hurt you. So if it shows that it's a worse risk than what risk rating 2.0 shows, it's not going to just make your rate go up. It can only help you. So if you do have one, it may be a good idea to submit it. Next slide, Brian. Staying the same. So everything pretty much is staying the same. The only thing that's changing is how they rate properties. So everything that I went over about how they rate properties, obviously that is what is changing. But what's staying the same is the CRS discounts are still around. The mandatory purchase requirements, meaning if you have a federally backed loan, you will be required to have flood insurance if you're in an A or B special flood hazard area. The coverages that I went over earlier are still the same. Like I said, with the EC, can still help. And there's those statutory rate caps that are still in place. So solutions. When we are trying to save somebody off flood insurance, Brian went over our flood proofing arm. So what we're looking to do is 3 different things. Number 1, mitigate the compliance. That's always the number 1 thing that we're trying to do, because not only can we potentially lower someone's flood insurance, but we're also going to help improve the risk. So by improving the risk, we then lower the flood insurance premium. That's what we call a win-win. Number 2, correctly rating that person. There are times where even though the rates are regulated through the NFIP, I see that there was something missed in the insurance quoting process by another agent, or the elevation certificate was done wrong or incorrectly, and simply fixing something like a paperwork issue could potentially save money on your flood insurance. And then number 3 is private flood insurance. Like I said, that is new, or not new, but really the last 10 years. There are some negatives though with private flood insurance. Real quick, just to rattle them off. 1 being you're not eligible for federal grants. You have to have an NFIP flood policy to be eligible for a federal grant. So that's a big thing to keep in mind. Also, it's surplus lines most of the time. So they are able to increase you to whatever at renewal. So if they like you 1 year and you could be paying $800, the next year they might be sending you a renewal offer of $10,000. And in those instances, a good idea might be to shop and look for a more different coverage. And then also, last but not least, if you leave the NFIP program and go to private flood insurance, you are now lapsing through the NFIP program. And what that means is if you want to go back to the NFIP program, you're no longer eligible for those discounted premiums. So on that, what I mean by that is if you're paying currently $1,000, risk rating 2.0 shows you should be paying $3,000. What's going to happen is you're going to be on that glide path and increase 15% a year roughly until you hit $3,000. If you leave to go to private, let's say you're paying $1,300 now on the glide path, and you want to go back to the NFIP, where you're going to go back at that $3,000 number. You're not going to go back to where you were on that glide path. So that's a big thing also to keep in mind. So that's all I got. Like I said, I just wanted to kind of speed through the insurance end of things because we do have someone speaking to more to it in detail. But we're here to help with anything really flood related from the flood proofing side. Brian covered everything that we do, and then as well as on the insurance side. And there's our info, and we'll make sure that you guys get the slides as well. And like I said, feel free to reach out with any questions.
Thank you so much, gentlemen. I appreciate it. All right, next up, Mr. Malyard. I know you're hanging out patiently waiting for your turn to present. You're up.
Very good, thank you. I'm Mike Malyard. My office is MIC Insurance here on Longboat Key. I've got 10 agents here on the island. I think I'm going to talk about the changes in the NFIP program, maybe from a more local perspective, in the sense that the value aspect of the house has become the dominating player in pricing. As an example, I have a Longboat Key home that recently changed hands this year. The prior premium, because it was purchased prior to the 21 equity and action change by the federal flood program, was about $1,300. But it's quite a valuable home. So the same $250,000 and 100 of contents were quoted on a new policy. That policy was about $11,000. So flood policies, be they federal or private, are assumable. So if you are selling your home or if you're buying a home in a floodplain area, you really need to retain your flood policy until date of sale so that a potential buyer can take over that policy, compensate you directly for the remaining days of the policy period, and you take over that glide path. So you're not moving to the end rate, as was referred to earlier. I think in estimating price increases, I think 15 to 18 seems to be the number that the glide path is utilizing. Florida is the biggest buyer, the biggest risk location for flood surges in America. In Florida, we have over 2 million homes coastal that are susceptible to surge. The next closest state would be Louisiana at about 880,000. And number 5 is down in the 150,000 homes in the northeast of our country. So Florida, with our exposure in volume, Florida with our exposure in high value coastal homes, is clearly bearing the brunt of this NFIP change that was instituted in 2021. The big issues I would just say to people who are not familiar with flooding, FEMA operates kind of NFIP is kind of part of their picture, but they are separate entities. So the NFIP is the insurance side, FEMA is the grant and potential benefit side outside of insurance. A couple of policy details. Flood insurance, if you do not live in your home in a primary sense, meaning 6 months and a day, then your NFIP program coverage on your dwelling is not replacement cost. Those contracts, if you do occupy for more than 6 months and a day, are replacement cost on the structure only. Contents, quite frankly, unless you're in a private flood policy setting, the federal policy is never replacement cost contents. Now, what does that mean? That means goodwill value for your personal property. And on the structure side is what is the value of used wood, used drywall in a actual cash value sense. So at least, we do need to understand what coverages we're buying and what we're getting for those payments. Flood insurance really covers primarily things that are the house and inside. There is virtually no to little coverage, no coverage for landscaping, pools, pool equipment. There is clean out coverage for elevated homes that have a garage below. FEMA will pay to clean up that area. They are not covering drywall or other replacement in a non-elevated area. If you own an elevated home and you have contents below the required elevation, that is not covered. Now, FEMA may give you some emergency money to pay for that, but the actual coverage that you're buying for contents does not extend to below floodplain locations. No landscaping coverage. Condos. I want to talk briefly about condo flood. Under the FEMA program, the condominium association really is the player that has the right to buy flood insurance for your unit. If they are purchasing the full $250K of coverage, you are really not eligible to buy flood dwelling coverage. All of the available money is already being snapped up by your association. You really functionally can't collect a claim on buying more. Condominiums are covering all of the attached items to the quality level that they were originally constructed to. So I live in a Longboat Key condo. My condo is not original. Am I fully covered by federal flood? No. Am I going to have to cough up cash potentially to make myself whole based upon what the association policy is going to cover? Yes. Okay. So they're going to pay me what today's version of what was originally installed here at Fairway Bay 2, which is a laminate kitchen cabinet with a piece of oak trim on the top or the bottom. That's what a condo unit owner is owed under a flood claim through the association coverage. Cooperate. If you've had a flood claim, provide the documentation. If you have a contents floodplain, they're going to require an inventory of what is gone. You really need to not get rid of things in a future flood until you've spoken to an adjuster who says, okay, take pictures. I'm okay with you not throwing them out. Not all adjusters will take that position. So hang on to documentation. The same documentation applies to condo unit owners and homeowners. A note on taxation. There's been a bill proposed by Florida legislatures to the federal government that would indicate that the 10% requirement of adjusted gross income would potentially be waived. So clients would potentially be able to get a 0 basis point of flood loss. So if I had $100,000 of landscaping loss, the potential is having $100,000 of deductibility per that flood loss. That bill is on, I believe, has been sent to the White House. Perhaps it'll be signed, perhaps not. While we're discussing the White House briefly, the federal government is sending signals really coming out of the new administration that would indicate that there's a impetus to do away with the NFIP and replace it all with private. It seems like that is a distinct possibility. It was discussed 4+ years ago and did not happen. But it would not surprise me based upon the ongoing deficit that the National Flood Insurance Program has operated under in the historical past, that moving it all to private may be in play in our near-term future. I think the prior gentleman had covered most of the details of flood, but if you're having a flood claim problem, communicate with your agent and the adjuster assigned. A lot of things with communication that seem to be problems can be easily fixed. And I would like to thank Longboat Key for providing this to our owners and occupants of the island. It's been a bad time for many. And for those who did not suffer damage, just feel for your neighbors and friends that have many of our owners on the island. This has been maybe the worst life-changing event of their lives. And empathy and understanding and kindness to our fellow owners should be the rule of play here. Thank you for your time.
Thank you so much, Mike. Well said. It has been a very traumatic experience for all of us. You know, those of us that work here and serve residents, folks that live here and have lived here for decades, that are really reeling. And so we're happy to share all this information to folks. I know we're pressed for time. We have a couple of questions in the Q&A box. If you haven't already typed your question in, please do so. We'll be happy to answer. I'm just going to go through one additional resource from FEMA that I'd like to share with everyone in case you're not familiar with it. It's called the FEMA Increased Cost of Compliance Grant. It's, of course, offered through FEMA. And so that's for flood insurance policyholders in high-risk flood areas that may receive up to $30,000 to help offset costs to bring their home or business into compliance with local community floodplain management ordinance or regulations. There are 4 options that are covered: elevation, relocation, demolition, or floodproofing. You can only file an ICC claim if your community determines that your home or business has been substantially damaged or repetitively damaged by a flood. If your community does determine that your home or business is substantially or repetitively damaged, a local official will explain the floodplain management ordinance provisions that you will have to meet. Once your community has made this determination, contact your insurance company or agent who wrote your flood policy and file an ICC claim. There is more information here through their website. You can take a picture of the QR code if you'd like. I'll also share this information in the chat box so that everyone has the website to file that grant. And so with that, we have some time for questions, probably about 20 minutes or so. Like I said, there are some questions in the Q&A box, and I'll go ahead and start asking a few of those now. The first question is from John, and he asks, how will SBA and or FEMA be affected by possible government shutdown? Angie or Anna, are you able to answer this question?
I'll defer to someone who is going to speak, or I can. I'm sorry. Okay. So we are waiting currently on Congress to refund the disaster planning. And however, what's important to note is that once the funds are going to be approved, it will be on a first come, first approved basis when they're dispensing the funds. So it's better to get in line, get approved, and then once that funding comes through, you will be the first person to be reimbursed. But currently, we are waiting upon Congress to refund our disaster funds.
Excellent.
Thank you.
Thank you so much. Thank you, Anna. Hey, Mike.
Yeah, I would just like to add that the impact on the federal flood program is we stop selling government flood because it's no longer available for sale until that funding has been reestablished. So historically a lengthy process leads to some closing issues, private flood being in play. If private won't take it, people won't close. So the NFIP funding is critical for the continuation of service on new sales of flood insurance.
Got it. Thank you for expanding, Mike. Our next question is for our planning, zoning, and building folks. Someone says that their permit status for their condo says that they applied on a specific date in November. It was issued in December. However, it still says that it's holding for reviews. Can you explain what that might mean? Do they have a permit, or is it something that's still being reviewed?
We would have to
Have the
get the address information and then look and see what the problem is and then get back with them. We'd be happy to do that. Reach out directly to them because it
Okay.
could be, I just have to look at it.
Sounds good. I will get the name and contact Patty and Neil, and that way we can follow up. Thank you.
Thank you.
For Anna, can condo and HOA associations apply for SBA loans?
Sorry. I would assume yes, because it's a business, but again, I would encourage those folks to call the SBA number and then ask this in specific. But I will get the answer to you and get back to you.
Excellent. And one more question for you, Anna, before you leave. What is the current interest rate for homeowners SBA loans? I see the rates for small businesses, but not those for homeowners.
So I'm going to put in the chat, there are fact sheets that are going to be sent to you, and oh dear. I'm sorry, I'm trying to get it really quick. I'm going to add that to the chat. There are fact sheets that are going to be sent to you, and here it is. I'm copying this. These are information. Again, please note that the deadline has been extended, so some of these fact sheets may state December. However, these are also available in different languages, and you can get the specific information, the specific interest rates that are listed here in these fact sheets, and it's there on the links.
Excellent. Thank you so much for sharing that, Anna. I appreciate it. And one more question, Mike. Someone asked if you can explain wind coverages from Milton. Is that something that you've experienced?
Sure. Okay. That opens an interesting door, because in 2017, Citizens came out with an exclusion on their homeowners policies that reads something like this: we will not cover water damage to the interior of a structure through the cause of wind. So if dust, sand, smoke, or water damage the interior of a home or condo, there must be a tear or an opening caused by the peril of wind in order for coverage to apply. In my industry, we refer to it as wind-driven rain. After Citizens made that change in 2017, perhaps 90% of the Florida admitted homeowners companies adopted the same wording. And I'm actually seeing that wording adopted in northern states now. The problem is we have coastal is that, yeah, you have hurricane windows and they won't break, but they're going to leak. Seals will fail. Water will build up on your balcony, being held up against the threshold of your sliders by wind. Water will then come through the bottom of your slider windows and destroy the interior. So the big issue in Florida homeowners insurance today is know what you're buying. There are markets that still cover the appropriate things, such as that wind-driven rain exposure, but the bulk of Florida admitted carriers exclude that coverage. So if you're with Citizens, a wind claim comes into play when the windows break or the sliders blow out or the roof tears off. So Florida homeowners insurance is clearly a buyer beware setting today. And my model and my agent's model on the island is if we have a vehicle with wind-driven rain, we're going to sell it. If we do not have a vehicle with wind-driven rain, we're going to explain to our clients what they do not have in coverage, because there are ways to mitigate. There are water absorption type products that a person might put in your window sills, slider thresholds. There's a company online called PIG, P-I-G, that makes water absorption products that would allow a condo unit owner or a homeowner to limit the internal water coming through sliders or windows to the outside edge of the rooms, perhaps, instead of going in a slider and then ending up at the front door 60 feet away, which I've had experience with from Milton. And it's a buyer beware market. So make sure you have the right coverage on your homeowner's policy.
Thank you, Mike. Definitely word for the wise. Buyers beware. We have two questions, and those would be for Anna. Anna, they're SBA questions. The first says that I already started work on an internal demo of a commercial property using my own resources. Can I still qualify for an SBA loan?
So my answer would be, I would recommend whoever to please visit FEMA first, because there are grants available before you would want to tap into loans. Go through the process. So the first step, for example, this evening or at any a disaster recovery center or business recovery at the disaster recovery center, to me, that's ideal because you have FEMA people and you have SBA. You do not come to the SBA first. We want everyone to go and visit, do the intake with FEMA, find out what's available to help you. Grants, you don't pay back. Loans, you have to pay back, with small interest. So we would encourage folks to first go to FEMA, see what's available. I don't know the answer to that specific question, and then we can sit down and work with you one-on-one. If you cannot go, please call. But FEMA's deadline is also January the 7th. So don't lose out on benefits that are available to you, please.
Thank you, Anna. And then one more question for you. Is the SBA loan a 30-year loan?
Yes. And again, if you look back on the in the chat, I put the links for Hurricane Milton and Helene. Look at the fact sheets, and you'll find out all the detailed information there. I want to thank you also because after this, I've sent a lot of information that you're going to receive, all the participants to this webinar, and it will answer all of your questions in detail. So that's a lot of information that we've covered, and it will be sent to you.
Thank you very much, Anna. And we have about 12 minutes left. I think I have one question, and this is for Mike. Mike, are new carriers still coming into the Florida market for property and wind coverages?
Thank you for that question. I think that primarily the carriers that are moving into the market now are carriers that are takeout companies. These are companies that are looking to cherry pick Citizens. Okay, so Citizens has, 1.2 million policyholders 2 months ago, which represents a great financial risk to the state of Florida. Why does it? Because if Citizens fails or has shortfalls, they're going to assess a fee, a surcharge on all policies in Florida, kind of accepting automobile. So it's boats and houses, homeowners policies. And right now that fee is probably between $150 and $250 a year on existing policies. That fee could be thousands of dollars. So Citizens is peeling off clients to companies that want them. So the primary vehicle of these new carriers is to cherry pick Citizens' book and take out policies that they believe will be profitable. Very few of them are offering coastal coverage. Okay, the new carriers are generally not going to want to be on Longboat Key. But to address the overall health of the coastal market, Helene was a flood event, wasn't a wind event. The homeowners companies had no real impact from Helene. Milton, potentially a $40 billion storm. We're part of an international catastrophic loss market where the losses historic in the last 5 years have been $300 billion a year. Our 40 billion did not really upset that apple cart. Reinsurers have been increasing pricing for certainly 5 years hard, and I believe they've reached a point where in next year if we wouldn't have had this storm, I would have guessed that pricing on homeowners would go down in 25. I believe that there still will be some carriers moving down. I don't think the up pricing pressure is significant right now. So if the world at large, the earth, has less than 300 billion of catastrophic losses next year, I believe we're on a path to see a lowering of premiums in coastal Florida. I hope that helps.
I'm sure it did. Thank you. Thank you very much, Mike. I appreciate it. So I don't think we have any additional questions. If you do, please take the last minute or two to type in your question. But to our panelists and presenters today, thank you all very much for your time. I know that everyone's incredibly busy. Like I said, pre-holiday, post-storm, chaos. But thank you for spending the past 90 minutes with us and sharing your expertise. Very much appreciated. And to all of our residents who are on the line, thank you so much for joining us. We continue to be inspired by your resilience and recovery across this island. Thank you for your patience and dedication, and we're always here if you need us. Thank you again. I don't see any other questions coming in, so with that, I'll leave all of you a couple minutes early for the rest of your day, but thank you so much again for joining us, and we appreciate your time. Have a great one. Happy holidays, everyone.
Thank
you
you.
again. Bye, guys.